Hello guys and welcome to my YouTube channel once again. Phenomenal FX traders. In the last two videos I posted, I noticed some complaints that I was not audible enough for some people to get the explanation clearly. So I have decided to create another video to explain that same strategy. I'm talking about the strategy I shared on this channel regarding the daily candlestick, how I will use the daily candlestick close to determine where to enter the market or where to enter a trade. All right, so in that video I used boom 500 to do the explanation, but in this video I'm going to use boom 300. As you can see on my screen, I'm on boom 300 and on the daily time frame as usual. All right, so I mentioned to you in that video like that all you need is to wait for what you need is to see the look at the close of the previous day candlestick, then wait for the current day's candlestick to go below the close of the previous day's candlestick. Then when it gets back to that same level, then you find an entry and you scalp the market. What I mean is this: generally we know that for a candlestick like this one right here, this bearish candlestick right here, you know that this is a bearish candlestick, meaning the trade is started selling down here. You see, this is the opening of this candlestick and this is the close. While this week here, the end of this week is the low, that's the lowest point it went to, while the top of this week here is the high. All right, that's for a bearish candlestick. But for a bullish candlestick like this green one, this is the opening, this is where it started and this is where it closed because it went up. And this, the top of this week here, is the close, is the high, while the top the end of this week here is the low. It was able to cover, or the least point was able to get to on that day. All right, so the strategy is about marking out this particular low like what we have here, or like what we have here currently. This is the current day's candlestick is yet to get to the low of this candlestick, this previous day's candlestick, because the previous day's candlestick is actually at this point, but the current day candlestick has not yet arrived this point, has not yet gotten to this point, let alone breaking out. So we will not use this one to explain. We're going to use this particular one right here to explain this one here. You can see what I'm talking about. We are going to use this particular bullish candlestick to explain this bearish candlestick, what happened there. All right guys, so now as you can see, there was this was where the wick, this was the low of this candlestick, and this must have been, let me check the date, this must have been on the 3rd of January 2023. That was date. This is 4th and today is 5th. This is where the candlestick, this is the low, the least price it could get to. So once you look, you notice that in the market, notice that you look for a horizontal line to mark out that zone, that particular where the wick got to. You see, after marking that out, then the next thing you will do is to wait to I look for another object like the rectangle. I would want to mark out this area. I want to mark out this area. Mind you, I'm just marking out because I'm not on the current candlestick. I want to see where it actually happened. All right, so after marking out this area, so that when I go to the lower time frame, I can easily identify it. The next thing I'll do is to go to the 1 hourly time frame first. You want to keep track of the movement. So you can see on the 1 hourly time frame, this is the one moment. Let me get the arrow line tool, so you can see now this was the week, meaning we have to adjust our line. We didn't put it properly. This is where we're trying to put the line. This is the week. How do I know that? If you go here, you will see this is 3rd of January. price went up, then came down. This is the least price it went to. So this is it. I made a mistake while positioning that horizontal line. If you want to confirm, we can just go to the daily time frame to confirm. Okay, you can see now. You can see now it's directly on. The wick is directly on the line. All right, so we go back to the, excuse me, we go back to the 1 hourly time. So on getting to the 1 hourly time frame, you can confirm that there was that this is what happened at that this the week that we just marked. Then market went up, came down, and broke through this level. Mind you, by this time we have gotten to the next day. This is when the next day started. If you look at, just look below, you will see where the next day started. This is 2 a.m. up till 11 a.m. before it came to break to 11 a.m. of 4th of January. Mind, this is 3rd of January. This is the 4th of January, the next day. So we wait for the candlestick to go below this, come back to retest, then we sell. Now, as you can see right here, you can see market broke through this zone here, this line. You can see this bearish candlestick here. Hold on, let me just adjust this. You can see this bearish candlestick here, and then this bullish candlestick. This bullish candlestick represents a kind of a pullback, is a kind of a retest. You will see that better when we go to a lower time frame. So the next thing we'll do is to go to a lower time frame, like the 15 minutes candlestick. Time frame. On the 15 minutes time frame, what do we have here, guys? What do we have here? You can see the market, after breaking out, after market broke out, it did not break out successfully. This was a kind of a bearish engulfing, but it was not safe to enter because it did not break and like there was no proper retest at this point. So you see market later came and broke down, came back to retest this line C. On retest of this line, and it gives this confirmation, like I mentioned in the previous video, that the fact that it has broken down and come back to retest is not a guarantee that it is going to sell. You must see some kind of confirmation that will tell you, okay, this market is going to sell. What this line here we are putting is only doing is to tell you that there is a chance that market can reverse at this point. Then once you're able to mark out this on this line, the next thing is just to wait for market to break through this line, come back to retest, then give you a confirmation that it's going to sell before you go into sell. So you can see on this 15 minutes time frame, it's very the view is better now. Now you can see the market broke through this zone, came down and retested it with candlestick patterns that confirm there's going to be that the market will continue going down. You can see the first one was this one here that looks like a pin bar. One moment, please. The first one was this one here that looks like a pin bar, you see. Then this one, all this indicates a possible reversal in the market, and this is happening on a resistance zone. This was previously a support zone, but it has turned to a resistance zone. Then after this one, you see we have a bearish engulfing candlestick pattern, indicating that the market is going to sell for a little while, depending on where the next support will be. You get, guys? So if you look at this, you can see that market, after retesting this zone with this confirmation, it sold, then was still dancing, and let's see what happened. I think I should remove this blue background. Okay. So you can see the market came back and reacted on this zone. You see the reaction on this zone, came back and reacted several times before it broke through and retested this zone. Now it's going to buy. Market is now going bullish. You can see it's creating highs, higher highs and higher lows. Now the market is not going bullish, guys. So now our concern is not about the bullish movement of the market. Our concern is about this particular one right here. Hold on, let me just see if I can. Our concern is what happened right here, because if you had if you were on the chart and you found this opportunity, guys, then you enter your trade to sell, selling this boom 300 right here from this point to this point. With a reasonable lot size, you make some reasonable amounts of money. Mind you, I'm just using this particular pair to explain. This thing works on all pairs. It works on all pairs. You see, when price got back to this level, it respected the level and tried to reverse, came back again, broke through it, retested it, and it looks like it's going to continue bullish, although we're already having higher highs and higher lows from this point up. You can see, so the market is somewhat bullish at this time, guys. So that's just the strategy. It's not difficult, guys. It's very simple. All you need to do is to, once you wake up, check where the previous day's candlestick closed, where the low, the least point it went to, and before it started reversing, then mark it out, allow market to break through it, go up and go, allow market to break through it, then retest it. After retesting it, wait for a confirmation. There's a high chance that you make some money with this particular with the trade you are going to enter. Because like now, let's say I saw this opportunity with these confirmations, I would want to go in with a reasonable lot size. Even if I have $50 on my account, I would want to go in. Imagine I place a sell trade at this point after seeing this second candlestick. This, let me zoom in to show you guys what I'm trying to explain. Okay, imagine I saw after seeing this particular but let me get this arrow line to show you what I mean. After seeing this particular candlestick, I will have a very strong, in fact 98%, 99.5% confidence that the market will be bullish. I have very strong confidence the market is going to be bullish. Bearish, I mean. And in this case, I would want to go in with a reasonable lot size. So even if I have $50 on my account to trade this boom 300, guys, I would want to go in with 2.0 is okay. My used to, because normally I like using big lot size with 3. But let's see what 2 will give us. From this point, if I enter the market at that point, then see where market got to. About $55 profit already, 54 up to this level. I might even go out at 50. I don't like staying too long. Once I'm at 50, I will just leave the market. So guys, this strategy can make you $50 every day. I'm telling you, at least $30. You can make $30 regularly. And mind you, if you open a chart on a particular pair and it doesn't give you this, it doesn't give you this setup, you leave it, go to another chart. Before you finish opening all the charts to check, one must give you this particular setup, and if you trade, you make money, guys. You make money. And secondly, you may not know where to take your profits. Personally, I don't like holding trades for too long. Let me tell you, if you can get 2 15-minute candlesticks, if you are scalping and you can get 2 15-minute candlesticks complete successfully, guys, with a reasonable lot size, you make some good money. But if you want to hold a trade till the next support zone, if you're on boom, then you need to consider a lot of factors. So in this case, I want to consider the daily time frame again, looking at the structure that was there. If I want to know where to take my profit or close the trades, then I will look at, you see the market has been bullish. I've been giving a kind of a channel pattern at this point, so, and the trade we took, hold on please, the candlestick that we took the trade is this long bearish candlestick that gave this bearish engulfing pattern, this particular candlestick. And mind you, enter the market at this point, so I will just target this particular either I will target the trend line or target anywhere around here to take my profit. That's what I will do. I will just target anywhere around here to take my profit, because we can see that each time market gets to this trend line, it reverses. Each time market gets to this trend line, it reverses. So if I enter the trade at this point, we are on the daily time frame, then it approaches this place, I will take my profit and leave the market to avoid spikes, since we are trading against spike at this time. And mind, the market is actually bullish on the daily time frame. So you guys, you can make good money with this strategy. It's very simple. Just mark out the wicks. Like now, The previous day's candlestick wick is this, like this one we have here. If it happens that these candles, the current candlesticks, later maybe market later moves down, breaks below this wick, then retests it, gives me a confirmation, I would want to sell, and I want to target this particular place where market has been buying previously. I want to target this point. So that is how it works. It's very simple, guys. It works on all the pairs. In fact, this also works on volatility pairs. All you need to do is to practice them. All strategies require practice. Once you practice them, you'll master them. There's how you just look at the market without even drawing any line, and you understand what is happening in the market. There's how you just look at the candlestick pattern that has formed, that just formed, and you know what's going to happen in the next. You can predict what will possibly happen next in the market. So, guys, I want you to practice this. If you have any questions about this strategy, please do not hesitate to um, write in the comment section. And also remember, our training is coming up, our free training is coming up very soon. I'll update in the Telegram channel. The link to the Telegram channel is in the description of this video, so just do well to go down to the description of this video and click on the link to join us. I'll update you guys in the channel very soon when the training is coming up, but it's coming up very soon, guys. The training is coming up very soon. Maybe during the training I will take time to make more explanations about this particular strategy and other simple price action strategies we can apply to make some good money this year. Don't fail to join the training. I implore you guys to join the training, and I'll see you in my next video. Peace out.